Cathie Wood has gained a reputation for her unwavering confidence in Tesla, even during the early stages of the electric vehicle manufacture. In 2020, Wood garnered attention for her remarkable investment performance driven by her bets on high-growth stocks like Tesla. Her exchange-traded funds delivered impressive returns throughout 2020, especially her flagship fund, ARK, which skyrocketed by approximately 300% between March 2020 and February 2021. However, looking ahead, ARK ETF holders aren't experiencing the same level of optimism. A significant sell-off has impacted speculative technology stocks, which are prominent holdings in the ARK fund. As a result, ARK has declined by over 70% from its peak in 2021, but has shown a recovery of nearly 50% from its low point in December 2022. Cathie Wood has a price target of $2,000 per share for Tesla, but as of the time of the making of this video, the stock's trading just under $175. Wood and her team believe that Tesla could pose a significant threat to ride-sharing companies like Uber and Lyft once autonomous taxis become commercially available. One of the reasons for her bullish outlook on Tesla is the expectation that the company will eventually leverage its artificial intelligence technology to develop a network of robotaxis. ARK analyst Tasha Keeney released a newsletter focusing on Tesla and the potential for an autonomous ride-hailing network. While they maintain an overall bullish stance on Tesla, their emphasis is on the scalability of the robotaxi network and the role that existing ride-hail players are likely to play in the future economics of this system. According to ARK, Tesla's robotaxi network has the potential to seize a multi-trillion-dollar opportunity. Their belief is that autonomous ride-hailing will significantly decrease the cost of mobility, making it only 1/8 of the average cost of ride-hailing services today. This drastic reduction in cost is expected to stimulate widespread adoption and unlock unparalleled economic productivity. ARK's research indicates that autonomous ride-hailing platforms could contribute approximately $26 trillion to the global GDP and generate $2 trillion in profits annually by 2030. To put this into perspective, the global GDP reached around $89 trillion in 2021 and around $103 trillion in 2022. Previously, ARK hypothesized that once autonomous taxi platforms become commercialized, their take rate, the percentage of gross revenues they retain, could potentially exceed the current rates of Uber and Lyft, which are around 20 to 30%. However, now there's speculation as to whether the take rate for autonomous ride-hailing services could be even higher, possibly around 80 to 90%. The reason behind this belief is that autonomous ride-hailing services are expected to offer consumers a superior experience compared to human-driven ride-hailing services. This includes a significant reduction of around 80% in accidents, as well as other efficiencies that come with minimal or no human involvement. Based on this analysis, it was initially estimated that the take rate for autonomous ride-hailing platforms would be around 60%, which is at the higher end of observed take rates across various industries. However, a new perspective on marketplace economics suggests that Gaussian transaction cost principles could apply to autonomous taxi services. This was not considered in the previous take rate estimates. This means that autonomous ride-hail operators would be able to effectively reduce execution costs, particularly the cost of finding a good driver. To illustrate this potential, let's consider Tesla's ambitions in the autonomous ride-hail space. In this scenario, platform fees could be as high as 80 to 90%, allowing only 10 to 20% of gross revenues to incentivize vehicle owners to join the Tesla network. ARK's previous research indicated that Tesla and other autonomous platform providers could compensate vehicle owners to operate at a rate of 20 cents to 30 cents per mile when operating at scale. With pricing set at $2 or higher per mile, which is approximately Uber's current pricing, an autonomous platform operator could potentially capture 80 to 90% of gross revenues, which is significantly more than initially estimated. However, it's important to note several caveats to this analysis. Firstly, Tesla may need to offer a higher take rate to attract enough owners to join their network. Secondly, the cost per mile will depend on the rate of vehicle utilization, which may be lower during the initial stages of autonomous ride-hail services. Consequently, the initial take rates may be slightly lower as well. Thirdly, as platform operators expand into different geographic regions and face competition, the take rate may need to be adjusted from higher levels. Finally, additional costs such as congestion taxes could increase the platform's cost per mile over time. Despite the passage of time and inflation, the cost of owning and operating a personal car has remained relatively constant since the Model T was first assembled. In 1871, the cost per mile of a personally owned vehicle was $1.70. By 2016, this cost had reduced to 70 cents per mile when adjusted for inflation. ARC's research indicates that once autonomous taxis are widely available, the cost of travel could be as low as 25 cents per mile for consumers, leading to widespread adoption. Additionally, ARC's research shows that consumers value the time that they spend driving within a range of 60 cents to $1.10 per mile, with work-related travel being more highly valued than non-work-related travel. Currently, the average cost for ride-hailing is around $2 per mile, which is significantly higher than the perceived value of time for consumers, as well as the marginal cost of driving a personal car, which is approximately 34 cents per mile. ARC's research also suggests that consumers will be willing to pay higher prices for autonomous ride-hail services due to the value they place on time and convenience. As a result, expect different tiers of service to emerge at various price points. With the estimated cost of 25 cents per mile, it's expected that autonomous ride-hail services will be able to attract a wider audience than traditional ride-hail services. ARC has predicted that autonomous taxis will become the primary mode of transportation in the coming years, since they'll ultimately be less expensive than owning a personal vehicle. Overall, the low cost and convenience of autonomous ride-hail services are expected to take a larger share of the transportation market, even from traditional car owners who already pay for convenience. Autonomous travel will become even more affordable than the marginal cost of driving a personal car, and the addressable market for autonomous ride-hail services could be worth up to $11 trillion. ARC's research suggests that companies that own the technology behind autonomous vehicles could have significant value in the future auto industry. They believe that many of the ride-hailing auto manufacturing and car rental companies we know today may not survive the transition to autonomous vehicles. Currently, Tesla is leading the way in terms of progress towards achieving fully autonomous technology. Tesla is positioning itself to compete in the emerging mobility-as-a-service market, which is projected to be worth trillions of dollars. They aim to introduce the first large-scale commercial autonomous offering in this market. While companies like Waymo and Aptiv currently operate fleets of autonomous vehicles, they're limited in scale with only a few hundred vehicles confined to specific metro areas. In contrast, Tesla's ambitions include rapidly scaling their fleet to hundreds of thousands of vehicles and eventually millions of vehicles by the end of the decade. Other companies seeking to compete with Tesla will need to solve the challenges of autonomy, integrate hardware and software into electric drivetrains, and do so in an economically viable manner at scale. In addition to the autonomous vehicle market, electric vehicles, EVs, are gaining mainstream popularity at a faster pace than anticipated. Legacy car companies are struggling to keep up with this transition. Tesla, on the other hand, has a distinct advantage in technology, supply chain, and manufacturing expertise, having been building EVs for as long as they've been an established car company. However, the main market that holds tremendous potential is in the realm of robotaxis. With each passing day, more data is being collected, bringing us closer to realizing the opportunity for widespread adoption of autonomous ride-hailing services. Although the arrival of autonomous taxis has been delayed from its original timeline, the market potential remains substantial, estimated to be worth trillions of dollars. Despite pushing back the adoption curve by a year, ARC Investment Management projects that the present value of cash flows over a 10-year period could range from $1 to $2 trillion. The question arises as to who will benefit from this value. It's likely that owners of autonomous technology will wield significant control over the economic aspects. Presently, existing ride-hailing platforms do not possess market-ready autonomous technology. In the best-case scenario, partnering with owners of such technology could lead to a reduction in their current commission cuts of 20 to 30% to less than 5%. ARC has previously highlighted Tesla's potential to launch a profitable human-driven ride-hailing service before introducing an autonomous taxi network. This approach could generate a wealth of training data for Tesla's autonomous neural network and establish the necessary infrastructure for routing and payments in an autonomous ride-hailing service. Tesla's leadership position in the electric vehicle industry, achieved through years of innovation and industry influence, now hinges on its level of preparedness as other automakers join the race towards electrification. Tesla's performance in recent years, particularly since 2020, has further cemented its position as a formidable player in the industry. While the past 2 years have showcased Tesla's ability to navigate challenges, they're more indicative of the company's significance for the future. Tesla finds itself in a prime position to dominate in the coming years, particularly in the fields of autonomy and chip development, thanks to its impressive accomplishments in recent times. Essentially, the past 2 years have served as a litmus test for companies prepared to embrace the era of electric vehicles. Numerous automotive companies worldwide have announced plans for electrification, but bringing these products to market has proven increasingly challenging. What sets Tesla apart is its ability to not only withstand competition, but also establish itself as a long-standing leader, continually enhancing an already industry-leading product. Furthermore, the economic implications are mind-boggling. Each vehicle equipped with full self-driving that remains on the road generates an astounding $20,000 in profit annually. This surpasses the profit margins from manufacturing and selling most vehicles, and these profits are realized for each vehicle multiple times. When Tesla reaches its target of building 20 million vehicles by 2030, it won't merely mean 20 million vehicle sales. Instead, it translates to approximately $400 billion per year for the next 2 decades. Considering the $20,000 profit per vehicle, if Tesla maintains this production level, it would generate a staggering $4 trillion per year by 2040, justifying a market capitalization of $80 trillion based on a conservative 20x price-to-earnings ratio. These figures are stated in today's dollars, implying even higher values in 2040. It's worth noting that these predictions hold true for the nearer term as well. Additionally, it's crucial to recognize that Tesla will have a monopoly on full self-driving technology, at least for a considerable period. Developing another system of this magnitude is tremendously costly, and the risk of wholesale failure cannot be ignored. Thus, the prospect of building an alternative FSD system may not even be feasible. Despite the existing challenges such as achieving near-perfect reliability across all potential scenarios and establishing comprehensive regulations for the operation of Level 5 autonomous vehicles on roads, Tesla is steadily progressing towards these goals. The process of change often unfolds gradually and then suddenly accelerates. As time goes on, innovation has the power to replace established industry players, enhance efficiencies, and capture the majority of market share. By recognizing the dynamics of disruptive innovation and adopting a long-term perspective, Tesla is poised to seize exponential growth opportunities. That's why Tesla strategically focuses on prospects that have the potential to scale significantly as various technologies converge, thereby reshaping entire industries. Thanks for watching. Until next time.